One thing we talked about earlier on before the interview, Nathan, was the fact that we saw foreign buyers continuing to come into Indian bonds. They bought more than $1 billion, if I'm not mistaken. And it seems that foreign sentiment is a bit different from the more cynical view, for lack of a better term, that we're seeing in the onshore markets in India. Why do you think there's a divergence? Why do you think foreign investors or foreign bond buyers, at least, are a bit more upbeat about the fixed income space in India than their own investors domestically?
So I think from a foreign allocation perspective, like EM in high yield and in Asia, India, Indonesia fit well into that kind of the weaker dollar, search for yield kind of asset class. And that's why we're seeing inflows into India. There's also an index inclusion taking place from this month, September, which is happening for India bonds, another positive. But it's worth noting that, the ownership of India bonds by foreign investors is still relatively low at 3.5%. And so most of the price action is still being driven by onshore. And onshore sentiment is for us very negative. I think we've also been reaching a point where the market is, erring on the side of becoming a little bit dysfunctional in the Indian bond market. We've seen a couple of issuers have to cancel issuances at both the SOE and the corporate level over the past couple of weeks, citing the higher yields as a negative. And also some of the state bond auctions that have been going through over the past month have been taken down very poorly, with, again, a few states not actually being able to issue bonds into the market. So the sentiment from onshore clients we think is very negative, and that's why we've been highlighting in a few of our reports that, it's hard to time when, but we may be reaching a point where we need to see some intervention from either the RBI themselves or from the government of India with regards to the outlook for the supply of Indian bonds.